Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Welcome to the Australian Property Podcast. Thank you so much for tuning in. We're on a mission to become Australia's most trusted property podcast. And today, you're in the studio today with Chris Bates, a mortgage broker. And today I'm doing a future first home buyer episode with Melissa Vincent. Thanks for joining us.
Thanks so much for having me. I'm really excited.
So Melissa's part of the Rask team, and you'll see a lot of her in lots of different ways. But we thought it'd be really interesting just to have a real chat today. Melissa's really thinking about a future first home buyer, and a lot of the challenges she's thinking through is what a lot of potentially first home buyers are also thinking about. And so we're just going to have a conversation around really the logistics and the reality of some of the things that first home buyers face in the country, not just in Sydney, but across the whole of Australia. So Melissa, maybe hit us up with the first question. You know, where do you want to take this conversation?
Yeah, of course. So I suppose, like you said, I think it's probably some of the things that are on a lot of people's mind, especially at the moment. But just like a bit of context about my situation. I am from Perth, but I live in Sydney. So obviously the property market is really different in both of those states. So I think the mentality in different areas is probably a little bit different. But I'm kind of at a stage where I am looking to start my property journey in Sydney. So I'm just kind of curious of what are the first things that I should be thinking about when I'm starting off in that journey?
So it's you've kind of already hit the nail on the head a little bit. The first thing I'll ask as a broker, I mean, I was a financial advisor for a long time, so it's hard for me to not want to know a lot of detail, right? and I think that the first question I'd be wanting to know for yourself is like, you know, so you grew up in Perth, you've moved to Sydney, like what is your sort of longer term plan, right? Now, this is not just for you, but it's for any first home buyer. Like a lot of people that are, you know, going to a certain city for work, but ultimately they want to move back to their hometown, or maybe they want to go overseas, etc. So the first thing I think what you really want to do is start to map out your life, and, you know, start to think, well, I'm going to be, you know, in Sydney for 3 to 5 years, but I ultimately want to move back to Perth. And that changes your decision. But if you said, look, you know, I'm actually, you know what, I really love Sydney. It's great for work prospects. I've got family here. I've got great friends. I love Perth, but I'm happy to fly back, you know, for Christmas to see our family, etc. And I'm expecting to be here for, you know, a good 5 to 10 years. Then, you know, that's the first thing to sort of think about. One of the things with a lot of first home buyers as well is it's really, especially when you're single, is that it's really hard, right? It's really hard to save. And it's also, you know, the amount of deposit you need, but it's also hard in terms of the amount you can borrow, right? You've got one income that a bank will lend on. And the other thing why it's really hard, I find, is that your world can change pretty fast.
Absolutely.
You know, I've been married now for, I think it's 4 years. But if you go back sort of 7, 8 years ago, I was single for a long time. And then all of a sudden I met my wife, right? And, you know, my world changed in the space of weeks, right? And I think that's one of the hard things with when you are, you know, a first time buyer and you're single is that, you know, what you really want to do is think through is, ideally, you know, can you make a stepping stone today that even if you do, I'm not saying everyone wants a partner, right? And everyone wants a family, but if you do get a partner, this is going to be something that's going to really grow your current savings, but also be something that's really going to potentially support that as, you know, if you have a partner, right? It's not just going to be something that suits you.
For sure.
So, yeah, let's just talk about your situation though. Like, do you think you're going to stay in Sydney? You know, you're in long term. What do you think? What's your plan?
Look, I think I will. I love it here. Love Perth, but it's a little bit small for me. In terms of job, my job is here, although most of the team's in Melbourne. But I just love the lifestyle in Sydney. I lived in London as well, so it's kind of like that in between. Quite a big city, but still has an amazing lifestyle. So I personally don't think I'll move anywhere else. I mean, obviously something could change in an instant, but I think I'm here to stay. But you kind of said something that resonated with me. There's like a lot of people that I know do say, when I talk about, wanting to buy a property, they're like, well, why don't you wait until you're in a long-term relationship so you have two incomes? But for me, I don't want to do that. I don't want to rely on anyone, and that's something that's a variable that's could be, who knows, into the future. Could be tomorrow, it could be in like 5 years, it could be never. So
Yeah.
that's something that I have in
Yeah.
my mind of wanting to do it, by
Yeah.
myself somewhat.
So, and absolutely, and I think that's a really noble thing to be doing, right? And I think you're
Mhm.
saving, and I think it's people are working on their careers, and and if you sit and just leave your money in the bank forever, well, not forever, but for
Mhm.
years, you potentially could have been better if you made some investment decisions. I
Absolutely.
think with buying, some shares in a little ETF and things like these are really easy things to do, because you
Yeah.
can easily sell them. I think when you're buying into the property market, it's a really big investment. It's a really lumpy investment, and it's
Mhm.
um, with I think for people in your situation, you've got to really focus on making sure you get a quality asset, because
Mhm.
the time when let's say you do meet a partner and it's 3 or 4
Mhm.
years down the line, and you say wanted to get married or you wanted to have
Mhm.
kids, whatever you bought today may not be facilitate that, right? So you might have to sell it. So one of the risks I see with first home buyers is that their time frame of holding a property can be quite short.
Yeah.
And so what really matters to them is that if they do have to hold it in a short time frame and they didn't want to sell it, they thought they were going to live in Sydney forever, but they decided to move
Mhm.
back to Perth, or they got a partner, etc.
Mhm.
That because they took their time, they bought a quality asset. Yes, maybe they may not made that much money, but they didn't buy an asset that went down in value, or they
Yeah.
didn't. One of the things with that as well, so one, getting a quality asset, but it's also trying to limit your transaction costs. So
Right.
because the more that your transaction costs are to buy it or sell it, means that the more that property has to grow to start to make you money. So one of the things with first home buyers is to really understand what options you've got around sort of stamp duty and
Mhm.
government exemptions. Things like lender's mortgage insurance is a cost.
Yeah.
And so, yeah, what's your sort of understanding of what the deposit you need? Have you thought about, because this is one of the
Yeah.
things, there's a bit of a myth there. So what do you believe actually do you need for a
Absolutely.
deposit?
Yeah, so I mean, in my head, I always had
Mm,
that you needed to have like, 20%
yeah.
deposit. I think that's probably what my parents had. And I will be a bit transparent, and like I am in a little bit of a privileged position that I have parents who can help me a little bit with the deposit. But I've had friends who have bought apartments with a 5% deposit, and something that Amy actually told me recently was about the lender's mortgage insurance, which is something that I wasn't sure about. I didn't really know anything about. So yeah, maybe you can talk me through some of the
Yeah.
deposit options.
Yeah, and the thing is, these are always changing, right?
Mhm.
So stereotypical. You're right. Like the 20% deposit is a beautiful number because you
Yeah.
could go to pretty much any lender and you wouldn't pay something called lender's mortgage insurance. But
Mhm.
20% for a first home buyer is an enormous amount when you're
So much
talking.
money.
And so that's just potentially not realistic, right? So
Absolutely.
stamp duty is one of the costs that you generally always need to pay, right?
Mhm.
But sometimes when you're a first home buyer, depending on the state you're in, this is a
Mhm.
state-based tax. For first home buyers, they'll either have a limit to when you don't have to pay stamp duty. So New South
Mhm.
Wales, it's sort of around 650 to 800,000. There's no stamp duty. In New South Wales right now, there's actually up to 1.5 million you don't have to pay stamp duty,
Wow.
but that might change with the government in the next few weeks,
Right.
and by July. So you do really want to understand whatever state you're buying in, you want to
Mhm.
understand what are the benefits around not paying stamp duty for first home buyers.
Mhm.
um, but let's say you do need to pay stamp duty, you really probably in your mind need to think stamp duty is going to cost me around 5%, right?
Yep.
Which is a lot of money. It's
Yep.
probably a bit less than that, but once you pay a few legal fees and things like that, an easy way to think about it, if I want to buy a property at 600,000, I need
Mhm.
$30,000 for stamp duty. It's sort of not too
Yep.
far off that.
Okay.
So, but you might not need to pay it depending on your state. But from a deposit from a bank point of view, it really depends. And what government schemes are out there. So the government a
Mhm.
couple of years ago really want to encourage first home buyers into the market, and they brought out this thing called 5% deposit home loans. And they've been like really quite successful. There are limits on the amount of income that you
Mhm.
can have to achieve that. So about 120,000 for
Mhm.
a single. But that's definitely something for first-home buyers to consider, because that policy the government set up means you only need a 5% deposit to get access to this home loan, and you don't pay any lender's mortgage insurance or anything.
Wow.
So but you have to have you have to be a citizen, or they've changed it to
Mhm.
PR actually now,
Right.
and an income under 120. But let's say you can't get access to that scheme for some reason,
Mhm.
and you're thinking 5% stamp duty.
Yep.
The deposit you really want to probably aim for after that is a minimum of 10% deposit.
Sure.
And the reason I say that is if you haven't got a 10% deposit, then your mortgage insurance is really expensive.
Mhm.
We generally wouldn't recommend clients to try to buy, at a 95% loan, because
Yep.
the mortgage insurance is huge. So,
And I
you know,
suppose at the moment, with there's so much uncertainty with interest rates and that sort of thing, it could put you in sort of a vulnerable position to be able to service those kind of loans and insurances.
yes, it's a good point. So the higher LVR loans actually are higher interest rates. That's the
Mhm.
first thing. Secondly, if someone has gone for a higher LVR loan, it's most likely the reason they've done that is they had no other money.
Yeah.
And so they couldn't stretch to a 90% loan for a
Mhm.
10% deposit. And so and you pay a bigger mortgage insurance, which then adds on top of your loan. So you're paying a higher
Yep.
interest rate, a big mortgage, you've got no buffers.
Mhm.
And if there's any issue with the value of that property, you can very quickly get into something called negative equity, which is
Yep.
extremely stressful. And if something happened to you and you had to sell,
Mhm.
you could potentially go under, right? And
Yep.
ruin your credit file for a long time. So, you've got to be really careful going for these high LVR loans, especially if you don't know what you're doing from an asset selection point of view. So let's say, really a nice sweet spot's really for someone to aim for is a 10% deposit.
Mhm.
And then hopefully you don't have to pay stamp duty.
Yep.
But maybe you do. So it's like if you do have to pay stamp duty, it's about 15% times your purchase price, which is still a lot of money, right?
Yeah. Did I hear recently, this might just be New South Wales, but is there some sort of a new scheme, or it might not even be new, about apportioning your stamp duty over a certain amount of years? Or have I gotten
Yeah.
that totally off base?
No, you definitely did. So this is something that the Liberal pushed through late last year,
Mhm.
which is a bit cheeky of them, to be honest, because they knew there was election, a few months down the line,
Yeah.
and they pushed it through. And that meant that for first home buyers up to 1.5 million, they don't
Mhm.
have to pay stamp duty, but they pay an annual land tax. Now,
Right.
Liberals
Okay.
lost the election
Mm.
quite comfortably, and but right now in Parliament, I'm pretty sure it's in Parliament like in the next week or two, they're going to
Right.
debate it. And most likely it's going to get repealed, and it
Okay.
won't exist for first-home buyers in New South Wales, and
Mhm.
it'll move to maybe up to about under 800,000 in New South Wales. You won't have to pay stamp duty.
Okay.
But yeah, that's the thing with first-home buyers. It's always changing. The 5% deposit schemes didn't exist a few years ago.
Yeah.
And certain professions, I should throw that in here as well. Like,
Mhm.
so if you're a doctor, a lawyer, a chartered accountant, etc., you can go for a 90% loan and not pay lender's mortgage insurance.
Oh,
So if you're in
wow.
those sort of professions, it's a big advantage around lending. So that's
Yeah.
something for you to explore. But yeah, the deposit is really hard. So I
Mhm.
think for a lot of first home buyers, is definitely don't think 20% deposits. That's just not realistic.
Yep.
But a 10% deposit and maybe paying stamp duty is the number I'd be trying to aim for.
Okay, that's good to know, because it is definitely very daunting where you think, okay, I have to save all of this money, or like maybe liquidate other assets, or whatever. I mean, from my personal point of view, when I think about like mortgage repayments, that seems like something that I could be able to service, but getting that initial deposit is
Yeah.
scary.
Yeah, and it's really hard. It's like the hardest money to save. It's,
Hmm.
incomes are still growing.
Yep,
We're still working on our careers. We still want to have fun and travel and, live our lives,
absolutely,
right? Because it's harder to do that as you get older.
totally.
And so it is really hard. But I would say that, once you do get there, then
Hmm.
you can get your money to start grow, and it does get easier, and you've got equity, etc. So it's the
Yep,
first is absolutely the hardest.
yep.
Not everyone's in the fortunate position to get help from their family, but
Mhm.
generally speaking, if they are, I think if you go there and you really understand I think when you ask your family the right way, I think, and you really explain, look, I've saved this, and this is the amount of money I need, and these are the reasons why, and this is the type of property I'm going to get, and this is how I'm protected. Families really want to help. It's, when you are grateful, I feel like, if they can. So, the other thing is around the, sometimes there's a guarantor option, which is available for first home buyers. Now, we do not that many of them. The reason why is that they're actually quite complex to make sure that they protect both parties. There's two people these are basically where the parents usually are the ones who help their kids buy their first property. And, for the first home buyer, they actually don't need any money at all. They could actually purchase.
Wow.
Because what happens is the bank will secure that loan against not just the property that the first home buyer buys, but one of the properties the parents have got. So it might be their home, it might be an investment property they've got. And so if something went wrong with that loan that the first home buyer, the bank would go, we'll pay out the first home buyer's loan, but then we'll also pay out the other loan that's secured against the parent's property. And if there's something issue there, it could actually fall on the parents. And so, that's another thing for people to sort of explore. The challenges that come here is if there are changes to the parent situation, like they're thinking about selling, like they're thinking about downsizing. They're thinking about retiring, or they've only got one property and they need, or they want to do a renovation and they haven't got that much equity, or you've got 3 or 4 brothers and sisters wanting to do it at the same time, or
it can get sticky.
So guarantor loans are, and also the type of property you're buying. If you're not, if it's not a great asset, which you probably shouldn't be buying anyway, you've got to be really careful, because you're not just risking your money, you're actually risking your parents' money. And
it's true.
You don't want to be risking your relationship with your parents over, a poor property decision. And not say you would, but I think you've got to be really careful around guarantor loans.
Yeah, that makes sense. Well, I suppose that leads me to like sort of an add-on to that question is, once I have a deposit and I'm starting to look for properties, and I suppose it kind of goes into the borrowing capacity or borrowing in general. What sort of a property should I be looking for? What if I can't find anything that I really like, but I find something in a nice area, but it's like a little bit of a fixer-upper? Is that something that I need to consider as part of my loan? What are the considerations there? And should you do it in the first place? Should you just get something that's good to go?
Yeah, so probably the next thing, so you've got this deposit, but the first thing to really understand is how much money you can borrow, right?
Right.
And how much you can borrow isn't determined on how much money you've got. It depends on how much money you earn. And borrowing capacity right now, it's 2023. We've got, interest rates, have gone up a lot, and borrowing capacities have come down really tight. And so you can only borrow around 5 times your income. 12 months ago, it was probably 7 times your income. Okay. And so, someone listening to this, let's say you're on $80,000, right? 5 times that's around 400,000. If you get bonuses or commissions or overtime or, usually they're all countable, right? Depending on how long you've been with your job and things like that. So let's say you're on 80 and you get $20,000 of bonuses, then, you're on 100 times 5 is maybe 500,000.
And what if you have like a side hustle that, like, I teach Pilates on the side, but you're kind of a contractor. How does that work in terms of adding that into your loan?
Yeah. So the thing with all banks have different policies, right? So, and this is the thing that you've got to be careful on, is that if you go into a bank, you walk into a Commonwealth Bank or NAB or something like that, you're going to get their policies, right?
Right.
Whereas if you go to a mortgage broker, any broker, there's 19,000 of them, right? They can go access to, and every broker is pretty much exactly the same, right? They've all got access to the same lenders, pretty much identical, right? And so they'll go, okay, well, one bank will say, well, it's a contract. How long you had that contract? Or we need a minimum of 12 months. Another bank will say 6 months. Some bank will just do it on a few pay slips, etc. So things like that, it really depends on the bank that looks at your application. Some banks are a straight no. Some banks will look at it. And so when you've got a really, PAYG and you're on a certain salary, pretty much everywhere will look at you.
Yeah.
Probation's not really an issue. Like, a lot of first-time buyers are switching jobs. A lot of they believe that I've got to get through the probation before I can buy. Well, that's generally not an issue. Starting a business, it's usually a couple of years till you can really borrow money, a couple of years of financials. And so, but 5 times your income. So let's say in this situation, you're on 100, you've got 5 times that's 500 is you can
Mhm.
borrow, and you're looking to borrow at 90% because you've
Mhm.
got, maybe $60,000-$70,000 of savings or something like that.
Yep.
So you'd be looking at something maybe around sort of 550 or something,
Mhm.
in that scenario as your maximum.
Right.
And what would be also really valuable as a first-time buyer at that point is to go, okay, well, what would be my repayments?
Yes.
On that, and usually you're renting. And what would be my repayments, not just now, but what if interest rates went up?
Mhm.
What happens if they went up another 1% or 0.5%? How much would my repayments go up? And so that's a real before you start looking at a property, you want to stay in this research, figuring it out, the logistics and the numbers first,
Mhm.
before you then go, well, what's the right property to buy for that budget? You want to sort of make sure you can afford it first.
Totally. Being prepared for all kinds of futures, not just the one right now.
Yeah, that's right. So with the repayments number, so let's say your repayments are on a $500,000 loan. I've got a calculator in front of me. Let's say it's like $2,500 or $3,000 a month, right?
Yeah.
A good thing for first time buyers is that might think, oh, I'm already paying $1,800 a month now in rent, right?
Mhm.
And my repayments are going to go to $3,000.
Mhm.
And they think, oh, it's a big jump. What we really encourage for first time buyers, or anyone really, is to know, well, what's my $3,000 a month of my repayments? What is actually interest,
Yep.
and what is actually capital?
Right.
Because the interest is kind of like rent. Interest is money you lose. It goes to the bank, but the capital is actually money that reduces your loan. And so it's actually like saving. And so when we look at those sort of numbers, yes, your repayments are maybe $3,000 a month, but maybe $2,000 that is interest, which is
Mhm.
very similar to your rent,
Yep.
$1,800 a month. And maybe the extra 1,000 was actually paying your mortgage off.
Yeah.
And so for a lot of first-time buyers, I think it's really valuable to do that number. There are other costs to owning versus renting. So you might have to
Mhm.
pay strata, you might have to pay insurance, you might have to do maintenance, you might
Of
have to
course.
that you don't have to pay as renting.
Mhm.
But that's definitely a good, because a lot of people think, oh, I'm only paying $80 a month rent. I've got to pay $3,000 of mortgage repayments plus all those costs. I might just rent. It's better off. Well, no,
Mhm.
you've got to compare interest and rent a bit separate.
Absolutely. I never thought of it that way, but it makes sense because it is something that you're building. It's yours.
Yeah, absolutely. And you will sell one day, right? So let's say this first
Mhm.
situation, like you might sell it in 2 years, right? You meet someone, you go, actually, you know what? We don't want an apartment. We want a house, or we want to move
Mhm.
regionally, or we want to move back to Perth, and the only way to do that is to sell. And
Mhm.
so that extra $1,000 a month you've been paying with your mortgage for the last 2 or 3 years, might be $30,000. Well, that means your mortgage has reduced $30,000. So when you sell, you'll get that money back, assuming the property's gone up in value. And
Yep.
that's probably the next part of our conversation.
Yes, yes. Well, so yeah, about the fixer upper, what's kind of the pros and the cons of that? Because I mean, living in Sydney, around the area that I live, you see a lot of beautiful apartments in a good location, but maybe the kitchen's not quite right or the bathroom's a little tired. What are kind of what are your thoughts on getting something like that and fixing it up?
Yeah, so I think for a lot of first-time buyers, jumping straight into the housing market, right, is really tough, right?
Hmm.
Especially in our capital city, Sydney, Melbourne, Brisbane,
Yeah.
etc. So a lot of first-time buyers look at villa units, they
Hmm.
look at apartments, they look at little potentially even townhouses,
Yeah.
etc. And there's usually two types. There's the new builds, right? Like
Hmm.
the high density apartments. And there's these things like low density or medium density, and they're like maybe built in the 60s and 70s Art Deco
Hmm.
apartments,
Yeah.
etc. So in Sydney, I think a lot of first time buyers should be looking at those.
Yeah.
Little apartments. So you might be going in the inner west, or you might be going somewhere on the North Shore, etc. Depends on your budget, right?
Yeah.
And versus like a newer build high density apartment, right, where they're going to build more of them, and there's
Hmm.
potentially building issues, and you can't add any value to them because they've been built 10 years ago,
Hmm.
and they're not that super desirable to sort of families or downsizers. They're really
Hmm.
just been a lot of renters in them, etc. So
Yeah.
I think in Sydney, for example, I think a lot of first home buyers, a really good idea to look at those sort of older apartments. And absolutely, potentially you might need to spend some money on it. It's always good to get something that's really solid. You do your
Yep.
building and pest, or in this situation, a strata report, and make sure there's no issues in the building that are
Sure.
going to cost you a lot of money. But then I think what a lot of first home buyers can do is they move into it and then they slowly add value to it over time. It's not a case of bang, you've got 100,000 left over, let's do the bathroom, the kitchen, etc. But generally, they rip out the old carpet, they paint it, they put some floorboards down, they change the lights, they
Totally.
these small things that can really make the place much more homely. And finally, maybe they get the strata approved and they do the kitchen or they do a bathroom and they make it a cute little place.
Yeah, that makes sense. I mean, not something that's such a fixer-upper that it's not livable, but something that, you can live in and, eat like slowly, do it up. That's something that I'm definitely looking at. I like things that have a bit of character anyway.
Yeah.
So
if you're in Melbourne, you might even look at like a little villa unit like that. I love them as a great little investment. They're like so they're in like really nice sort of family suburbs. They might be in the east, or they might be in the Bayside, or might be in the lower north, or in the inner west around sort of Yarraville or something. And there might be 4 or 5 little brick villas, and they got a little courtyard or a little garden, and you got parking, and they're in a quiet little street, and so they're amazing, because you're getting land, but also you're getting a bigger place. You're not just getting this tiny apartment on a busy road. And when you add a little bit of value to it, a young family could look at it, right? Because it's like a good stepping stone for them. And so
Totally.
from a growth point of view, I think they do really well. And in that situation in Melbourne, if you met a partner and you bought that, then you could potentially stay there and have children, because there's a second bedroom and things like that. So that's something that a lot of first home buyers look at.
Yeah, that makes sense. And I think when people are looking, how much of a future lens should you really be having? I think you kind of touched on it before, but how far in the future should I be looking for something that I want in the next 5 years, or should I be looking for something that I want in 10 years? Because as you said, like things can change so quickly.
Look, I think it's hard. Like if you're in a couple, we really encourage them to try to plan longer term, because you've got double incomes, you've got double the savings, and not try to buy something that suits you now that won't suit you in 5 years. Because let's say that you want to live in the city as a couple now, and then you want to have kids in 5 years' time. Like I think what ends up happening is they live the life today, and then you go and try to upgrade, and the asset you want to buy into has actually gone up more than what you just bought. And then you paid stamp duty and selling costs. And so you lived a life, but you haven't actually helped yourself financially. And so we really encourage people to think through if they're having kids, and could they get a property that they could grow into, like a house that they could potentially renovate one day. And I mean, that was a client yesterday, they were trying to get a little in Brisbane. They were going to get an apartment, a 3-bed apartment, etc. And we were sort of encouraging them, maybe they should go a little bit further away, maybe spend a little bit more money, but get a house. Actually, that was in Melbourne, to be honest. And a house that they could renovate one day. And because the renovated houses would be too expensive. So it depends on where you are in the first home buyer journey. And I think if you are in that sort of early stage of a relationship as well, we help lots of clients. I do think it really helps try to get that clarity, that confidence there, rather than I'm just going to go do this myself because I want to be independent. But you're in a relationship as well. Like, we had a client last year. It was a same-sex couple. She got a bit of inheritance, one of them. And, but they've been together for a while as a couple, and she was going to do something by herself. And then we got them both on the same page, and the other, and they joined their incomes together, and they went out and they bought something together, and, it's both theirs, and they're super happy and pleased. And so don't be too afraid of getting your partner involved, but you also then, don't want to just do it yourself as well. If it's not going to be the right thing, because in that situation, if she went and bought something just for herself, it wouldn't have been really what would have suited them both.
That's true.
Because her budget was more limited. And so, it's a good conversation. It really depends on your situation.
Totally, totally. That makes sense. I'm really curious to know your thoughts on off the plan apartments. So I've heard great stories, I've heard terrible stories. So I have had one story, a friend of mine who she purchased an off the plan apartment and it was meant to be done a few months, like 6 months into the future. She's been waiting for 3 years. And then I have another person who works in real estate and was selling off the plan apartments. And her argument was that, okay, if you're purchasing an off the plan apartment in 2023, but the apartment's not going to be ready until 2025, you're locking in a 2023 price, but for a property that's further in the future. So I think in her eyes, it was going to go up in value, but that's, you don't have a crystal ball. You don't know what's going to happen in the future. So yeah, what are your thoughts on that
So it's
whole
interesting.
scenario?
Yeah. So the real people make money on off the plan is that second scenario, right? So
Mhm.
they buy at a really good time. It's all a timing
Yep.
thing, right? And they buy really well, and the market shifts
Mhm.
because, and they couldn't potentially afford to buy in 2023. They could afford to
Yeah,
sign a contract because you don't pay for that. You just pay a deposit, right?
it's true.
They don't need the income. They don't need to get the bank lending, etc. All they need to do is pay a deposit and sign a contract, right?
Mhm.
And so the people where you can potentially make some money in off the plan is when you buy really well, just at pre a market boom. And
Mhm.
you also buy in a really good development that went up, really strongly in that time frame. And
Mhm.
you then the only way to make money on it though is to potentially settle on the property. So
Right.
you still need to then get the build done. You still need to then finally get the loan. So you have
Mhm.
to have the income to get the loan.
Yeah,
And then you need to look to sell the property to make your money, really.
that's
And then you
true.
pay capital gains tax potentially, if unless you lived in it, then you might pay stamp
Mhm.
duty, or you maybe not, and you have to selling costs. And so generally speaking, I think that's a really fraught with danger strategy. What happens if the property doesn't go up in value?
Yeah.
Off the plan space is generally a lot of medium and high density apartments.
Mhm.
You can get off the plan space in townhouses and things like that.
Yeah.
But ultimately, medium and high density apartments are one of the most underperforming assets. It's one of the riskiest
Mhm.
assets to buy.
Yeah.
If you talk to anyone who bought off the plan in Brisbane for the last 15, 20 years, you'll get hundreds and thousands of horror stories, right?
Yeah.
Where they bought an off the plan for 500,000. 2 years later, it was built, and the bank said it's only worth 450,000.
Oh, that would be
And they
awful for them.
Yeah, and they couldn't get
Yeah.
lending because the bank
Mhm.
only wants to lend 80% on lots off the plan, and
Right.
um, they only had a 50,000, and they had to walk away from their deposit, or they
Yeah.
did settle and then they sold it for a $30,000 loss.
Mhm.
The Melbourne apartment market in the off the plan space has done pretty much nothing for 15 years. A lot
Right.
of people have lost money there. So, in particular, some developments occasionally, they are very scarce developments,
Mhm.
and they're done by a really good builder, etc.
Yeah.
And people have made money in off the plan.
Mhm.
But ultimately, there's lots of risks. There's builder risk. There's
Mhm.
finance risk.
Yeah.
There's lots of There's a scarcity risk. There could be lots of them. There's lots of
Mhm.
apartments. They build lots more than, that your friend thought, oh, this is the only apartment block in 2023. Then all of a sudden, in the next 3 years, there's another 10 apartment blocks go up.
Yeah.
The market can shift, interest rates can change, lots can change with this space. So
Yeah.
I think it's fraught with danger. I would really encourage people not to go down that route and buy down
Mhm.
the established market. There's 11 million properties. You don't need to go and try to buy these off the plans. I think
Yeah.
you're better off going with the proven
Mhm.
properties that the building's going to stand the test of time because it's been there for 40 or 50 years.
Totally. That makes complete sense.
Yeah.
That's a great tip for me.
Yeah. Yeah.
Yeah.
Yeah.
I was also interested in learning or knowing, getting some tips, I suppose. So a little bit about my kind of personal situation is I don't really have any loans or debt,
Yeah.
um, but I have an issue with spending. I
Yeah.
probably spend way too much money than I normally should. I just love food and stuff.
Yeah.
So what are your tips that you have for people who are on this journey that maybe do find it difficult to save? I mean, some people are great at saving, a huge chunk of the income, but what's your tips for people who maybe find it a little more challenging?
Look, I think the only way to really do it is start with the end in mind, right? So get very clear on
Mhm.
what you are trying to achieve, right? I
Yep.
really want to, because unless you're really motivated, you're not going to do it, right? So you
So
go,
true.
well, I want to get my first place because I do want to, I'm earning great income, but I just want to have something to show for it. Like it's one thing when you're climbing the corporate ladder or whatever it might be, and
Mhm.
your salary's going up. But if your spending's going up just equally, like you've got to say, well, what is it really worth it? I've got these things, I've got
Absolutely.
these experience, but I'm not, keeping anything back. And there is a mix of those things that you need, right?
Mhm.
And so I would say, look, get the understanding of your deposit. Figure out where you're at today, figure out if there's any help from family potentially as well, and figure out, well, how much do you need to save over whatever time frame. Then also look at your day-to-day income. I think
Mhm.
trying to focus on, a lot of people focus on trying to cut their spending back, but I think also you
Yeah.
should focus on trying to increase your income. Some people have got
Mhm.
professions where they do a bit of extra study, or they swap employers, or they can increase their income. Sometimes people
Yep.
can't, where they haven't got that luxury, right? There's certain
Mhm.
professions where you're on more of a rigid time frame and salaries, etc.
Yep. Of course.
So yeah, focus on your income, focus on your personal development, your human capital, I guess that you could call it.
Mhm.
But then also on your spending side, look, there's lots of ways you can attack this. I mean, the Barefoot Investors sold 2 million plus books for a
Yes.
reason. It's a big problem. That book's mainly giving you a system to manage your cash flow,
Mhm.
plus some other tips. I
Yep.
think that's a good starting point. But it's just really looking at what is your fixed costs.
Mhm.
Can you try to reduce them a little bit? Like, do I really need to live in this beautiful place? Could I keep my rent down? Could
Mhm.
I maybe get rid of some of my fixed costs that I don't really need to spend?
Yeah.
And then it's just giving yourself a budget to live each week, right? I think the best way
Yeah.
to say it is, okay, well, my salary is say $5,000 a month. Well, $3,000 goes on my fixed costs. I've got $2,000 left over. I'm going to try to save 1,000, and then the other $1,000 I've got to spend each month on
Yeah.
experiences or on materials, right? And
Yeah.
so that's $250 a week. I'm going to put $250 a week into a separate account,
Mhm.
and that's all I've got. And I think what you end up doing is in that situation, you start basing your spending on $250, not on your $5,000. And so when you're
Yep.
going to go and spend $100 on a dinner, you go,
Mm.
is this really valuable? Do I really value this? Or,
Yep.
or could I not do that? Could I just go to the park with a friend and someone and spend $30 and get the exact
Yep.
same value from it? And I think that's where you start to spend based on what you've got, not on what you think you earn. And that's a good trick that I used.
Yeah. That's a great tip for me. I have to remember that every time there's a sample sale up the road
Yeah.
from me.
Yeah.
I
Yeah.
can't like resist a good deal, even though it's something that I don't need.
Yeah. Yeah. Well,
No, that's
60% of our economy is driven by consumerism, and so is all the advertisement. And the way that we live. So it's not just your problem.
absolutely.
Yeah.
Um, Probably one of the last questions that I have is buying for a lifestyle, which is we've kind of already spoken about it, but where should you compromise? So I love where I live now. I love the lifestyle around it, but it is expensive. So where do you draw the line? Like where do you have to go? I need to compromise. I need to move somewhere else, or I need to get something smaller. Yeah, how do people navigate? I suppose like the mentality of that.
Yeah, it's an interesting one. So I get it. So um, sometimes the places where we all want to live, right, are the most expensive places to rent or buy, right? And
Hmm.
so what a first home buyer sometimes have to do is make that shift, and they go,
Yeah.
well, now it doesn't mean you have to do it forever, right? So what a first home buyers might do is they might buy in a little apartment,
Hmm.
and it might be say in the inner west or something like that. But ultimately, they want to live in Bondi, or they want to live in,
Yeah.
I don't know, Manly, or they want to live, in Surrey or whatever it is. Talking
Hmm.
about Sydney, or in Melbourne, they might want to live in St Kilda, or Albert Park, or South Yarra, or
Hmm.
etc., or Fitzroy. But they can't afford to buy in those areas.
Yeah.
So, what you really want to do you do want to live in the property straight away if you can. One,
Yeah.
because you might get the stamp duty exemptions.
Hmm.
Two, there might be benefits with the government home loans. But three, if you do live in the property, it does mean that it can grow for you tax free because it's your principal place of residence. Now,
Yeah.
The ATO rules around this are pretty vague. You know, there's not a certain time frame you have to live in it, but you definitely have to live in it
Yeah.
to get that. But if you moved out of it after, let's call it 6 or 12 months, getting tax advice on this, that property could grow for you tax-free for up to 6 years. It's something called the 6-year rule. So
Right.
for a lot of first-time buyers, you definitely maybe move to that inner west or those areas that you purchased as a first-time buyer. You might live there for a bit, and then you might rent it out and have it as an investment
Yeah.
property. And then you move back to Bondi and you flat share with some friends or etc. So you've got an asset, you've used your savings, you've got something growing for you, and you're renting it out, but then you move back to where you want to live. And so you just haven't not decided, I'm not going to do anything because I just want to keep living in Bondi. You've taken that, short-term hit from a lifestyle point of view.
Yeah.
But you've also done something for your future self. But then you don't have to stay there. There's no reason why you can't. You have to live in your property because you own it. There's no reason why you can't just rent it out.
That's true. That's really true. I suppose my final question for you is, when obviously you're a mortgage broker, you've been a financial advisor, when do you think is the right time for someone to talk to someone like you?
Look, I don't think it's too early. I think really the what you want to do is just figure out, is there anything about your situation that a bank's not going to like?
Yep.
Sometimes people have made a few mistakes on their credit file. They're not forever, but at least
Yeah.
you know about them. Sometimes you can get them removed. Sending letters. There's lots of companies that can help you with that. So
Right.
yeah,
Didn't know that.
your credit files just might be the first thing you want to just make sure you're okay. You can even do
Mhm.
that without seeing a broker. You can just do it online.
Right.
But just understanding of your job, your income, what you can borrow, your savings, the current government schemes, I don't think there's anything too early. But yeah, you just want to then potentially say, okay, well, this is where I am today. How are things going to be in 12 months? What's going to happen with it? What can I do to improve my situation? And so,
Yeah.
I don't think there's ever too early. But yeah.
No, I love that. Well, you've given me some really good tips in terms of what things that I need to consider, and hopefully, I'm sure that other people probably feeling in the same boat will get
Yeah.
some little nuggets of gold from you.
Yeah, absolutely. And thanks to everyone listening to the podcast. And if you've got any questions, definitely email them through and check out some of the links in the show notes if you did want to talk about your situation. And thanks, Melissa, for coming on. It was a good chat.
Thank you so much.